Hello, everyone. Welcome to JMac Investing. My name is Jason. Got a real treat today. Up until this point, I've only done interviews of CEOs of target companies of SPACs. Well, today, guess what? I have an interview with one of the originators of the SPAC format itself in general. I have today on the show Stephen Levine of Early Bird Capital. If you don't believe me, check this out. If you actually look up in Google Special Purpose Acquisition Company and you go to the history of SPACs, Steve Levine and David Miller, who is currently managing partner of Graubard Miller Law Firm and who developed the template of the SPAC. So this is one of the OGs. He has been around since and has been a part of underwriting the very first SPACs that ever hit markets. He was involved in all of the ones through the 90s. He says there were only 14. Really hoping for this to be a very educational video for for myself included, being a very younger, about a year's worth of SPAC investing. And so really hoping this really benefits you all. I pre-recorded this and I went back and reviewed it, and my audio, for some reason, I'm not sure, because I've went back and re-recorded a couple of times and I haven't had the same issue. I had this horrible static going on. So I actually removed all my own audio except for a few key little pieces where I made a little joke or something like that. But even then, you can still hear the static. So I removed all of that, and when I asked the question, I just put it up as text on the screen. So I don't think it's going to distract from, because this is all about the knowledge and historical perspective that Stephen Levine is providing all of us here. So this should be a real treat. I hope you enjoy it. With that being said, let's get right into and welcome on Stephen Levine.
Good morning, Jason. It's a pleasure. Yeah, I'm doing fine. Thank you. No, happy to do that. We have been around the product for a very long time. I've been involved with SPACs for over 20 years, predating the new millennium. So we've seen a lot of iterations, a lot of changes. The basic product has not changed. Just a lot of the activity around the product has changed. So happy to get into whatever aspect you care to. Well, our firm, the founders of our firm, myself and a gentleman by the name of David Nussbaum. David was had another firm that was actually originated the SPAC. When we launched Early Bird in 2000. We retained the trademark and rights to the SPAC name and continued issuing SPACs into the new millennium. The first SPACs were underwritten, I think, around 1993, 94. And there were 14 SPACs done in the 90s. And then relaunched the product in 2003 with Early Bird Capital that David and I launched. And we've been doing SPACs and focused in that SPAC product ever since that time.
Was it always called SPACs, even back then, or?
The acronym has always been the acronym. It was designed initially to say Specified Purpose Acquisition Corp. SPAC is the acronym, and it was focused it had to be focused in a specific targeted sector. Over time, there were more and more sponsors that want to have the opportunity to do something in a generalist way, so just opportunistic. So the specified became special purpose. So while it's still the same four letters, instead of the S being specified, it's becomes special. So it can be a broader mandate than simply one targeted sector. By all means. So the SPAC was designed with investor safeguards in mind. It was designed to offer investors, both institutional and retail individuals, the opportunity to participate in M&A with seasoned investment professionals that would raise capital in this structure, go out and find a target company, negotiate terms with that company, and then announce a transaction to the public. And the public would then have the opportunity to either retain their interests or redeem their interests. And so there was always the safeguard of having access to your capital back if you decided you didn't want to participate in the offering. Those funds were always segregated and unavailable to the sponsor group until the public investor released the capital by agreeing to remain a shareholder in the ongoing business post-combination. So those safeguards were what really were the formative reasons behind the SPAC structure. It's basically a vehicle, capital form, capital raised, put into trust with a public trading equity, which is a derivative of that cash in trust. So the cash gets put into a trust. It can only invest in treasuries or treasury derivative. And it sits there in trust earning interest for the benefit of the public shareholder until the time that the management team, the sponsor of the SPAC, identifies a target, negotiates terms, and then files a proxy with the SEC disclosing all aspects of the transaction, looking very much like a prospectus for the IPO of that target. That includes financial information, diligence information, background on the company, etc. And then a proxy is sent to all shareholders, and every shareholder has the right to either remain a shareholder of the combined entity, redeem his shares for the cash in trust, or if the market is trading well, he can sell his shares in the open market to someone who wants to buy them. So those are the alternatives that are provided to the investor in connection with every vote on a business combination. That's the general process. Started in the early 90s, and there were 14 in the 90s. You're right. Last couple of years have seen tremendous growth. Last year was a record-breaking year, and 2021 is off to an even faster start. I think it's a culmination of a few different just trends and occurrences over the last 6 or 7 years. The sponsors of SPACs were originally what we would call fundless sponsors, where they were people who had experience in a particular sector, but had no access to capital to do a transaction. They weren't running a fund. They weren't private equity. And so the idea was to provide them with the capital, the capability to offer a potential target access to capital if the shareholders approve the transaction. Over time, what's happened is it was adopted first by this fundless sponsor, then by the private equity sponsor, and you started to see private equity become more and more a factor in the sponsorship of SPAC. So, in 2019, I believe there was $14 billion of SPAC issuance. Prior to that, if you look back at 2015, it was probably half of that or less. And in 2020, we saw close to $90 billion new issuance. And I would say over 50% of that new issuance in capital raised was sponsored by private equity firms. And also in 2020, you saw a rotation not only into the private equity sponsor, but the venture capital sponsor. So now the product is across basically all sectors of the market. Then you also saw the adoption of the product by the bulge bracket investment banks, where before that they were, looking at SPACs as a second or third alternative for their sell side or IPO candidates. So they have mandates to sell companies and they have mandates to take companies public. As the SPAC gained prominence in the private equity community, the CEOs of companies would approach their bankers and say, well, why don't we look at a SPAC as an alternative? At the same time, the sponsor, who was a private equity sponsor, had direct access to other portfolio companies and other private equity portfolios because he knew them. He knew, he could pick up the phone and call the PM of another private equity firm. So over time, the quality of the sponsor has risen, the prominence of the sponsor has risen, the access to higher quality targets has risen, has grown, and the investor base has now become a tremendously deep and broad investor base into the sector. As a virtue of that, as a result of that, the investment banks have had to adopt the product in a much broader and open-armed way, so that now they're looking at SPACs as being an equal alternative to the traditional IPO process. So a lot of the companies they represent, they are now bringing SPACs to them as alternatives to the traditional wait online for the IPO market. So that's why you're seeing so much happening at one time: the depth of the capital, the change in the sponsor, the identity or the prototype sponsor, and the quality of the target. All are changing at the same time. So you're seeing a tremendous growth and a rush to market. You have to, absolutely.
We're winning.
Yeah, you're right. Yeah, well, Shaq he is a name on the board or a name participant, but you actually need a very deep organization capable of sourcing and executing on transactions. This is by no means an easy process. It's a very difficult process, very time consuming. There's a tremendous amount of diligence. There's a tremendous amount of negotiations that are going on behind the scenes before a transaction ever gets to market. No, it had, like I said, everything. It's sort of a new dynamic in the market because, again, as JMac, as you find high-profile venture capital sponsors to transactions, so too you will find high-profile targets. That's a great company, I think, with a tremendous future. I think it's there's a number of companies coming out of venture portfolios into SPACs now, and I think that is also as a result of who the sponsors are. The now, I think, becoming public again has now become a desire on the part of these companies. For a long time, they were staying private and intended to stay private, but I think with the public markets being welcoming, earlier stage, more aspirational and transformational businesses are going public for SPACs. Understand, yes, the product will cycle. There's a tremendous amount of issuance, and then there will be a pause. When those pauses take place, you may see a retrenchment of pricing somewhat. But understand, as an investor, you do have the safeguard of the trust. So there's limited volatility. There's definitely limited downside volatility. You may see the break price, so to speak. If you bought it at $10, might drop into the 990s or even 980s. But remember that it's treasury backed, and if you hold it to maturity, meaning when the SPAC has to either do a transaction or liquidate, you will get your original $10 back. So while there is a volatility, there is also downside protection in the SPAC. There is a floor to where you are at risk. But yes, we do expect, do you expect cycles in the overall broader markets? Absolutely. The market will always not be a bull market. You will run into sort of resets or periods of downturn, and that's common in stock markets over, if you take over a 10-year period, it's going to happen. So yes, it will happen with SPACs, and the rate of issuance will slow, and there will be some breaking price. But I will tell you that's what fuels the market is a combination of quality of investor, but also, quality of transaction, but also announcement. So you've seen a very, very nice flow of new announcements, business combinations, and SPACs. That, as long as that continues, you'll see a recycling of capital, you'll see a recycling of investment, and the market will remain strong. Whether it can remain at the current rate of issuance, I don't see that as a possibility or a likelihood. However, it doesn't mean that the investments that have already been made won't work. It just means that the rate of new issuance and therefore some of the fever in the market may temper. So you may see a reduction in the the first day trading prices, or some of that may wear off. But I think if you look at the transactions carefully, and if you maintain a broader portfolio of names, I think it's a good place to have capital, and it's a good way to see transactions, how they trade, before you need to make a decision as to whether you want to remain a shareholder. And that's the ultimate value of the SPAC over the traditional IPO, because when the deal's announced, there's a process that takes about 3 months from the time they file a proxy until the time you need to make a decision of whether or not to remain a shareholder, or whether or not you want to exercise your right of redemption. So you certainly have the opportunity to see how it's trading, see news and current events on that company before you need to make a decision. And if you take the time to look at those, and look at what the proxy says, you can make an informed decision over a period of time.
Simply stated, we're still bullish.
We are. We are. Yeah, there will be SPACs will be a mainstay in capital markets. Pretty sure that's here to stay. We're very obviously very proud of what we've created in the SPAC and the SPAC market. We are the only fully focused SPAC underwriter. That's all we do. We do initial public offerings, and we do any transactions related to the business combinations. So we're very active in the M&A side and in the new issue side. We take a lot of pride in what we've accomplished, and yeah, you can visit our website. It's www.earlybirdcapital.com, and feel free to do that and look at us. And if you have any questions, you can certainly reach out on our website, or LinkedIn or elsewhere, and we're happy to answer the best we can and provide whatever information we can.
Fantastic. I got it scrolling across the bottom there. So
Appreciate that.
Really appreciate your time, taking your time out to come on and chat with me, giving us a historical perspective on SPACs. And I hope you have a fantastic rest of your week.
All right. Thank you, Jason. Look forward to future conversations. Take care now.
Thank you very much.